Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. Today is the day that the Fed embarks on their mission to defeat the evil inflation. May the 4th be with you. Now, I know some of y'all are thinking the Imperial March in your head. I know you are. Today, the Fed wraps up their FOMC meeting in Washington, D.C. They'll end it with a press conference at about 2 p.m. this afternoon, Eastern Time. And like we said before, we're expecting a 50 basis point rate hike or an increase in the Fed fund rate. That's intended specifically to kind of shrink some of the cash that's available in the economy, slow down the economy just a little bit in order to fight inflation. Now, the one thing that we talked about yesterday kind of in depth that we're not sure about is how they're going to handle their balance sheet normalization. We know they want to get to about $100 billion a month in reduction on the balance sheet. How they're going to do that is really going to be the market mover today as that news comes out from the meeting, the minutes from the meeting, and then the press conference and the Q&A session with Fed Chair Powell. So that's an important part of what's happening today. As that news comes out, we'll let you know, and we'll have some more detail definitely for you tomorrow morning on how that's affecting the market. There's already been some volatility in the market this morning, and we'll talk a little bit more about that here in just a minute. But another big factor in the market is jobs. Jobs is an important piece of the economy and the marketplace, and it's important for real estate and mortgage as well. ADP released their job report showing that in the month of March, there were 240,000 jobs April. 240,000 jobs were created in the month of April, but that's lower than their expectation of 400,000. Now, March did see about 450,000 jobs created, so a little bit of a deceleration there in April as far as job creation goes. But here's kind of the headline within the headline on that. Small business lost around 121,000 jobs, while big business gained around 350,000 jobs, 321,000 jobs specifically. So 120,000 jobs were lost in small business. 321,000 jobs were gained in big business, large businesses. And what that really illustrates is that small businesses are having trouble keeping up with wages in such a high inflation environment and a high cost environment. So small businesses are really kind of struggling with job creation, while large businesses are able to kind of handle some of that wage increase that's going on as a result of inflation and things like that. Now, also, MBA released their data for mortgage applications last week. Purchase applications were up 4% week over week last week, which is great news, and we definitely felt that uptick in application volume coming from purchase applications specifically. They're still down 11% year over year, but if you factor in cash buyers, then that's people who are buying a home and not taking out a mortgage, really we're only down about 9% year over year as far as application volume goes. Now, one other piece of news in the MBA that they reported, the interest rate, the average 30-year fixed interest rate went down ever so slightly, about 1 basis point, from 5.37% to 5.36%. But that's still the highest in almost 13 years that the interest rate has been. So just a interesting note about what's going on with that, and that really leads me into the market. All right, so as we said, the marketplace is pretty turbulent today. Right now, as of time of recording, the mortgage bonds are down 8 basis points. 10-year yield is up about 4 basis points. And this is the third straight day in a row that we've seen a decrease or a downtrend in the mortgage bonds, which means that mortgage interest rates are going back up again. So they're starting to creep back up again this week. We should see, based on the news this morning with the markets and the bonds and what they're doing, we should see mortgage interest rates open up a little bit higher this morning. And we're definitely going to be in reprice territory. The bonds are battling that floor of support right now. They're stuck right at that floor of support. How the markets handle and digest the news from the Fed today is really going to determine what happens throughout the day and really through the rest of the week as far as the bond market goes. If the news is digested favorably, we could see a reprice for the better. If the news is taken poorly, then we're definitely going to see some repricing for the worst. And underneath the floor of support that the bonds are battling right now, there's quite a bit of room to go. So as that news happens, we will definitely let you know. That's all the news that we have for you right this second, though. Again, we'll come back tomorrow. We'll give you a pretty detailed report on what the Fed said, how they're handling their balance sheet, and how it's going to affect the mortgage and the real estate market. If you have any questions, make sure to leave a comment. I would love to hear from you. This is always an open discussion. Please leave a comment, like, subscribe to our YouTube channel to make sure you get these updates every day. Also, over on Facebook, we're going to be sharing an infographic about the jobs report. So we're going to give you that ADP jobs report over on Facebook. Be sure to go over there, check it out, hit the like button. Hope you have a wonderful day. May the 4th be with you, and we'll see you tomorrow.